In this video, I'll be discussing disposal of plant assets. So essentially there's two ways to dispose of an asset. You can discard the asset or you can sell the asset. Disposal of an asset is going to be recorded by first updating the depreciation through the disposal date if necessary. Typically companies only record depreciation at the end of an accounting period, so if you're selling the asset at any other point, you're going to need to update depreciation through that date. So then we're going to take the updated book value, cost minus accumulated depreciation, and compare it with the proceeds. If you sell the asset, you will have proceeds. If you discard the asset, your proceeds are zero. If the proceeds exceeds the book value, you'll have a gain on disposal. If the proceeds are less than the book value, a loss on disposal occurs. On July 1, 2022, Beaufort Company sells equipment for $16,000 cash. The equipment originally cost $60,000 and as of January 1, 2022, had accumulated depreciation of $41,000. So the last time we recorded depreciation would have been December 31, 2021, and so we need to record depreciation for the first 6 months of 2022. And we are told the depreciation for the first 6 months of 2022 is $8,000. So we're going to make the same entry we would normally make, a debit to depreciation expense and a credit to accumulated depreciation, to update the depreciation expense through the disposal date. So now we have an equipment account with a balance of $60,000, and after we post the entry to update depreciation, we're going to have accumulated depreciation of $49,000. Our proceeds were $16,000 and our new book value is $11,000. So we are selling the asset for more than book value, and that results in a $5,000 gain. Our journal entry is going to be a debit to cash for the proceeds. After we remove the equipment from our books, because we sold it, both the equipment and the accumulated depreciation accounts need to have zero balances. So we're debiting accumulated depreciation for the balance of $49,000 and crediting equipment for the debit balance of $60,000. Gains are like revenues in that they are recorded with credits, so we are crediting gain on sale for $5,000. If we had discarded rather than sold this asset, our calculation would be the same. We would have made the entry to update the accumulated depreciation account. Cost is $60,000, accumulated depreciation is $49,000. The book value at the date of disposal is $11,000, and so if our proceeds are zero, the $11,000 is our loss on disposal. So once again, we need to take the asset and its related accumulated depreciation off the books. So we have a debit to accumulated depreciation for $49,000, a credit to equipment for $60,000. Losses are like expenses, they're recorded with debits, and so we have a debit to loss on disposal for $11,000. So both the gain and the loss would be reported on our income statement in the other expenses and losses section.